Good afternoon. Thank you for attending the Remit One event, Innovation in Payments and Remittances. In this session, we'll be discussing new tech in old business, exploring the new products that are redefining best in class. I am Osama Kasebati, Associate Sales Director at Remit One, and will be hosting today's event. We have an hour and 15 minutes for today's webinar. For the first 40 minutes, I will moderate a panel discussion with our expert panelists, and then there will be 30 minutes at the end of the session for questions from the audience. Please leave your questions via the Q&A button at the bottom of your Zoom screen at any point during the webinar, and we will try to answer as many questions as we can at the end of the session. Before we dive into our panel discussion, just a few words about Remit One, who we are, and how we support businesses in the money transfer industry. At Remit One, we assist a range of businesses, including startups, established money transfer operators, and banks by providing them with everything they need to start, run, and expand their global money transfer operation. We can get businesses up and running quickly by guiding them through the process of obtaining a money service license and remittance bank account. We provide businesses with leading technology, enabling them to run their entire remittance business, enhance customer services, and simplify operations. And finally, we support business growth by connecting our clients to our vast global network that we've delicately nurtured over the years. So to start today's panel session, I'm very pleased to introduce our expert panelists. First off, we have Nelson Izurzi. Hi, Nelson. How are you? It's just on mute at the moment. Nelson Izurzi has over 20 years rich experience in the international payments industry, with a focus for developing solutions that promote financial inclusion in underserved populations. Nelson co-founded Paykey with the purpose of enabling individuals living abroad to better care for their loved ones back home by providing direct remittance solutions for paying bills and expenses. Pleasure to have you here, Nelson.
Thanks, Osama. Good afternoon, everyone.
We also have Walter de Cruz. Hi, Walter.
Hello.
Pleasure to have you. VP Business Development at Munyo Solutions. Walter has over 35 years experience within telecommunications, mobile, and financial institutions. Walter is a seasoned expert in business leading in the payment space with particular expertise in emerging technologies. Pleasure to have you here, Walter.
Thank you.
And then finally, last but not least, we have Stone Atwine, CEO of Eversend. Hi, Stone.
Hi, how are you?
I'm very well, thank you. Thank you for asking. Stone has a rich experience in payments industry. He has worked with some of the world's largest banks and has co-founded leading remittance businesses. In 2017, he was selected by the government of France as an exceptionally talented entrepreneur and moved to Paris to found Eversend, Africa's first neobank. Hi, Stone. So without further ado, let's get into today's panel session. So how we like to do the session is I will sort of direct a question to one of our panelists. They can start the discussion, but that question is again can be posed to everyone. So if anyone else has any input on that particular question, please do feel free to jump in. I'm just going to start my stopwatch to make sure we're all on time. Okay, fantastic. So my first one's actually to Walter. Walter, what new technological advancements are now being utilized in the traditional remittance industry?
That's a very interesting question. In fact, I was really looking forward to answering this because I believe that some of the technology, a lot of the technological advancement is driven by external forces, by the regulator, by banking partners, and by the market, right? And it's about, for me, it's about who adopts it quicker to get into the market. So to answer the sort of question specifically, these are the sort of areas around regulatory technology, like, you know, ID verification, KYC, transaction monitoring, open banking, instant payments, digital banking, artificial intelligence, and of course, my favorite subject, blockchain. We'll go into that later, but for me, those are the main drivers, and a lot of it's been driven from external. For instance, regulatory technology. We all are aware that compliance is an evolving beast, no matter where you are in the world, and there's a cost associated with it. And so there's a lot of fintechs out there that are reducing that cost whilst providing very good tech service levels and a good way of compliance, right? Whether it's PEP checks, et cetera, right? ID verification. So, in the traditional remittance marketplace, you're seeing very basic sort of checks at the end points and the receiving points, and that's going to be forced upon them to be more transparent in terms of source of money, et cetera, as we move through this new environment. And RegTech is absolutely key to that, and of course, in certain markets, you have the instant payment world or open banking, right? And that is certainly a big effect in Europe and UK and North America and Australia, yet to sort of get into the rest of the markets, but it's there, it's coming, it's a big tsunami. And that's something that I think Remit One's customers need to really consider how they move into that world and to plan for that, because there's a cost base that isn't there. And how do you compete? How do you, add value on something that's ostensibly been free, right? Offered free or close to it, right? So those are the sort of overall arching advancements that I think the remittance market needs to consider, and some of which, as I said, are driven by external, or most of which I think are driven by external factors.
Okay, brilliant. So when we say in a traditional sense, traditional would be more your brick and mortar, agent-based. What have they been doing differently quite recently? Or what have they had to do differently quite recently? Well,
firstly, there's the problem with cash, as you know, in the high street, in that sort of scenario, and banking of that cash, right? So that's...
How has tech helped that along?
Well, by offering, you can't replace a physical asset like cash, right? You have to go through to the digital world, which is offering banking, an easy way of having a simple way of banking, topping up, maybe with cash, if you have to, right? If you look at some of the challenge banks, and Monzo is a great example, where you can, I think, top up to £300 or £500 a month, in cash, right? And you go up to a top up agent, put your money in, and it's within a few minutes, it's in your account. And so those are the things that need to look at, because right now the cash economy isn't working over here, and it's going to be driven further away from us, right? And I always like to use this as a real guideline, guys. When I remember, I'm Australian, and I remember I got a bank card. They called it the bank card. It was before Visa and MasterCard, right? I don't know whether you had the same thing yourselves, right? Shows my age a bit. I'm sorry about that. But my mum cut it up. She said she couldn't believe it. It came in the post, and I was only young, and she'd opened my post, as mums do, right? And she sees this card. What is this? Now, cut it up, right? And I think, I can't remember when they adopted the debit card or the ATM machine, but it took a while. And now, if you go and see the older people in our community, the people that are more mature, and you talk about wallets and crypto and digital currencies, it's like, wow. And I always explain that that's no different to a card when it came out, right? And so that's what I'd like to leave everyone with, that thought that the innovation is here, but it's happened before, and we've all evolved, and it's going to happen again. And the cards will be replaced by instant payments, largely speaking, and a few other things. So, the world, we're part of it, and it's exciting. And I think Remit One has an excellent roadmap to support its customers, frankly.
Fantastic. Thanks so much for that info, Walter. Very handy. Stone, I'm going to direct my next question to you. We know that regulation and fraud are one of the biggest challenges in the industry. What new tech is out there to overcome these challenges?
Yes, thank you, Sam. Regulation is a big pain for us, especially trying to operate across multiple countries on the African continent. And yeah, so being a new age player, thinking about what Walter just mentioned, we kind of try to do everything electronically. And what we've seen is generally software that we use for multiple things, starting from onboarding to compliance to KYC, anti-money laundering and things like that. And there's some interesting, very good, big advantages. Maybe some of the traditional players may not be using now, but things that help us with speed, with fast integration, with analytics. So you can, figure out we got 30,000 or 50,000 customers this month, and so many customers were, did KYC. Our success rate is X%. So we're seeing tons of interesting platforms. At Eversend, we use Mati for KYC verification, and we think they've built an interesting product. We've also previously worked with Onfido, so guys who are really cutting edge and using machine learning and artificial intelligence to kind of solve some of these problems. In terms of fraud, we see many interesting solutions. We've built a ton of things internally within Eversend. But also we are using some other platforms. We see, for example, Sift Science, which is super interesting kind of technology where if, for example, we've seen a user before that may be fraudulent and they try and sign up on any other platform within the Sift Science network, you can tell just from an email address or phone number or a gadget just from a phone that this particular user or this particular phone or this email address has actually been fraudulent before. And that really helps out because there's a lot of fraud. There's a lot of fraudsters, but a lot of the fraud is repeated. So you find guys using the same phone or the same email address across 10 different applications because they figured out a way to steal or to be fraudulent just on one app, and they kind of try out the same trick in multiple applications. And so we're seeing very interesting software. It's really exciting times now. Yeah, but I think the thing that changes the game a little bit is the ability to do all the required KYC due diligence check for politically exposed persons and sanction lists and things like that remotely without actually being close to the customer. We've seen, improvements in liveness, like liveness checks, such that when somebody signs up on their telephone, you can take a short video selfie, and there's technology now that can figure out that this person is alive, so that they didn't just get like a picture, and they're trying to fool the platform because people have tried all kinds of things. And then we have technology that can figure out that the video selfie is actually the same person as they appear on an ID that has been uploaded. Alteration detection on the document. Someone has not photoshopped it and puts a different name or a different face, and template matching. It's super interesting. Yeah, so good solutions.
No, absolutely, and it is also about customer experience. The better we have these solutions in place, obviously, the quicker it is for you to onboard someone and not needing to be there. So they're on their mobile phone, they can take the picture and you can onboard them. All the checks are done instantly. It gives that better user experience, obviously, as well. So yeah, no, very important. Thank you so much for that answer, Stone. My next one's actually going to Nelson. And Nelson, you operate in a unique space, the utility bill payment sector. What's the future of this vertical, and how do you see your vertical in relationship with the MSP space post-pandemic?
Sure, thanks, Osama. Well, I mean, bill payment has been there ever since the beginning, right? Everyone has bills to pay. Every household in the world pays multiple bills. I think we build an estimate just looking at basic utility services that you're talking about 40 billion payments a year based on the households around the world. And that's just looking at basic utility services around electricity, water, gas. When you start adding in around education, healthcare, government payments, the list goes, expands greatly. So that's, from that perspective, it's the opportunity is tremendous. When you look at it in terms of the intersection of remittances and how the funds that are received by the recipient are used, it's anywhere from about 20 to 30% of the funds that are being sent are used specifically for bill payment services. I think the question we have to ask is who's going to pay it? Is it the sender or the recipient? Now, from PayKey's perspective, we actually play both sides of it. Our platform is a global digital platform through one API integration. We offer both domestic and cross-border services, bill pay services in 30 plus countries. But cross-border bill pay, which is what we offer to a lot of our MTO customers, is really our original DNA, is how we started the company. And when you look at the surveys, around 50% of individuals, in most surveys, 40 to 50%, typically want the ability to be able to pay bills directly back home, either for control, to make sure that the funds that they're sending are being used for the appropriate activity, security, right? The reduce the risk of people picking up loads of cash and walking out and being assaulted. And most important, peace of mind, right? If they're sending funds home for their mom, to make sure that the electricity bill is being paid, the lights stay on, or if they're living abroad and they own home property back home, that those things are being taken care of and they don't have to rely on a relative to do those services. And there's a lot of interesting types of payments, not just basic utility services. You have overseas workers that have to contribute to Social Security, such as in the Philippines. You have individuals that are paying back their home country subsidized mortgages kind of from their federal governments. So that's PAGI in the Philippines and FONAVIN in Mexico. So it really is a great value-added service. Now, there are challenges around it. And there's three key challenges with bill pay in a cross-border context. The first one is awareness. Most individuals do not know that they can pay bills back in their home country, either for themselves or for their loved ones. So anytime we're working with a new client, it's really important to try to create that awareness and get that first usage and that comfort around doing it. The second piece is commitment. And I think that's always the challenge for MTOs. Their primary business is sending cash. That captures the lion's share of most mind space, most marketing dollars. So it's getting them to understand what is the value of bill payment. It's not just an incremental revenue stream, but rather it's looking at creating a more holistic view of managing the customer, as opposed to looking at the customer on a transactional basis. And then the third aspect that's challenging for bill pay is the regulatory piece, but it's slightly different than what you see in the money transfer world. What I mean is that in the regulatory area, it's not an item that, from a regulator perspective, they spend a lot of time thinking about. In most cases, from the recipient side, it's not considered regulated activity. It's considered a collection of services. Typically, on the recipient side, in the markets in Africa, Latin America, Asia, we don't have an issue. On the origination side, it's all over the place. The U.S. Regulates bill payment, but they also regulate domestic bill payment. It's one of the few countries in the world that really is active in regulating domestic bill pay. In other markets, like we do a lot of work in the GCC, the exchange houses have to get permission from the central bank, but it's not a regulated activity per se. So that is a really big challenge around it, because we default to managing it kind of on the market that's the most strict, which is the US. And that encumbers the product quite a bit. A product that is, and when you look at bill pay, it's a relatively low risk profile type of product. Small ticket, typically around $25 to $35. You can't encash it. It's not like you can pay the utility company and then go and pick the, and say, I didn't mean to pay the electricity bill, give me the cash back. Typically, once you pay it, you can't pay more, you can't do an excess payment or additional credits to the account. So but that regulatory piece is a challenge, and it complicates aspects of the business. But in general, well, the way I would summarize it is, if there's a commitment from the MSB or the money transfer operator, you've seen great results. And truthfully, our portfolio is binary. We have some customers that have had a tremendous success with the product, particularly around customer retention and really increasing overall lifetime value of the customer. Typically, a customer pays a bill. The next month, they're paying that bill. It's around 65 to 80% of the time, and it's consistent.
Just stop me there, Nelson, because you're actually answering my next question that I wanted to ask you as I go further along. So if I can just stop you there, but that's fantastic, really informative. And again, the bill payments is very different than remittance. I know people sort of tend to get confused sometimes. They want to do remittances and then they say it's for people to send money back home to pay their bills. They are two very different types of payments, the remittances, but then there are two different types of sets of rules, as you just mentioned, from the recipient side and the payment side, and that's what you guys sort of specifically do. But we'll definitely come back to the second part again, which you touched upon there, which how do you work hand in hand with the MSB, and how can they retain their clients by offering other services such as, but we will go on to that in a bit.
Yeah, perfect.
So my next question, I'm going to go back to Walter on this one. Walter, do you consider new adoption of technologies like blockchain may play major roles across regions, or are they sort of typically regional focused?
I think they're going to be very regional. And if you look at Africa in itself, there are certain countries within Africa where there's been significant adoption of crypto, often related to the existing currency, the status of their local currency. And I'll use Nigeria as an example. I think I saw a figure somewhere, it was 80% adoption or something like that. So, so it's not about boiling the ocean here. We have to really focus on corridors and where there's a supporting regulatory framework. But can I just take a little bit of a step back and talk about blockchain? Because I think blockchain means so much to so many people, and it's often misinterpreted or do you know what I mean? So for me, the application of blockchain isn't just about necessarily the transfer of value of an asset or funds, right? Yeah, it's a complete 3D picture that you can build around a transaction, whether it's bill paying, whether it's payments, whether it's remittances, whether it's DC, whatever, right? And so when we talked about the impact of the advancement of technologies at the start, I talked about, obviously regulatory tech, all of that stuff. You get that built into the blockchain. So when a value is moved, a smart contract, if you like, between multiple parties or two parties, right? Then when within that blockchain, obviously it could include a cryptocurrency, it could include US dollar, it could include anything, it could include gold, whatever the parties agree, the terms, the information that makes that transaction compliant, ranging from where the source of money is, the ID, right through to whatever it is, depending on whether the application is bill paying or remittances, just general remittances, overseas migrant worker remittances, all of that sort of stuff, that will be built in. And it, depending on the application, is how much information that blockchain needs to present. But it'll have the basic, including things like MAC address for where the transaction, or IP address, where that transaction was initiated, right? So I think hopefully that clears up where I see the impact on blockchain in terms of our industry, and more specifically in the region, say, for instance, the Europe to Africa, right? Where I think in the previous panel that you hosted, Sam, one of the panelists talked about France and the stablecoin and the adoption of stablecoin, formal adoption as a way of form of value. I mean, that's just the start, right? And you may not necessarily see Bitcoin or your what I would call, dare I say, mainstream cryptocurrencies, right? For instance, you might have a significant ecosystem which has all the stakeholders you need: end customers, banks, exchanges, liquidity pools, all of that. And you can create your own blockchain, your own token. And if all those stakeholders agree to the value of that, then going in and out of that ecosystem is relatively simple. Now, the way they do that is using stablecoin, because it's a one-to-one value to whatever currency you choose. But there are other ways to do it. And that there's a lot of, the other thing about this is going to be driven by the liquidity pools that are created here or in Europe and in Africa that support it. Because if you don't have the liquidity pool supporting that, then the transfer of that value can't be instant, can't be settled straight away, right? So
I mean, that's a really good point. And I think that goes on to quite neatly into my next question, actually, on Director Stone. So we've spoken a little about crypto and cross-border or cross regions. What about intra-Africa? So do you think the cryptocurrencies can be a solution to solve settlement problems intra-Africa cross-border remittances?
Yeah, definitely. So that's a super interesting question. So at Eversend, we're already using stablecoins to move value across different Eversend entities. So what we do is that we have partnerships within the different countries where we operate to kind of off-ramp and on-ramp stablecoins. So we use USDC a lot. We use USDT sometimes as well. Basically, these are currencies that are pegged to our normal fiat currencies, where value doesn't go up and down. And yeah, so in terms of intra-Africa, you really need to move value across borders pretty quickly, especially if you're not going to have tens of millions of dollars stuck in capital across different markets. And so we are already doing this internally. The customer doesn't see anything to do with crypto or with stablecoins, but we kind of use them between ourselves to make sure that if the FX doesn't balance out in the different countries, maybe we have a lot of Kenya shillings and we need a lot of Ghana cedi, then we use the digital currencies to move value around. Again, in regards to what Walter was saying, I think this is almost a no-brainer. The old system just wouldn't work for us, because that means that, you know, you would do a SWIFT transfer, which would take 3 or 5 days, which would go to New York, and then they have to exchange to US dollars and back, and you know the whole story of how many moves. It just doesn't work for us anymore. That means that we can reduce the amount of capital we need like massively just by using this almost instant settlements system of stablecoins. And we see this, I think it's coming, it's happening with, I think they say about 80% of central banks are actually considering central bank digital currencies. So that's going to be also super interesting to be used for settlement and trade. But I see the future of remittances, the future of B2B payments, securities settlement, all kinds of trade settlement are actually going into stablecoins, at least in the short term. We already have an example of Visa using USDC for settlement from some of its partners. I think it was crypto.com.
Yes.
So yeah, this is definitely the future, yeah.
Brilliant, fantastic. Thanks so much. Very informative from Stone. Thank you so much. I'm going to go back to Nelson now. And Nelson, just following on from sort of, again, what we were discussing. So customer loyalty can be a challenge in the remittance space. What new products and technologies should MSPs consider to strengthen their relationship with their end users?
Yeah, I mean, that's a great question. I want to take a step back and talk about some of the changes we're seeing in the industry. I mean, now, like similar to other, I'm not an expert in the remittance space, nor can I predict the future, but it's just interesting to see some trends where I think before you tended to have a lot of companies that this was their specialty. They were narrowly focused on their remittance space, whether walk-in, retail, or digital, or a combination of both. Now you have, over the past few years, and accelerating really over the past couple of years, the entrance of fintechs that this is an ancillary service. And so they're looking at remittances potentially slightly different. In some ways, they may be looking at it as a loss leader to seed local domestic wallets. And so that has the possibility of kind of upending the dynamics of the industry. And so what can companies that this is their core business do to kind of retain the customer and ensure that stickiness? And I think the first thing is to look at the customer, not from a transactional perspective, but holistically from a customer perspective, and say, how can I manage that person's financial health, right? They're an immigrant or an expat in this country. Beyond sending money home, what else value can I provide to them to help them manage their financial health? And the basic starts with products such as mobile top-ups, gift cards, bill payment. Bill payment is an interesting feature because of its recurring nature, the ability, for example, on our platform, to reach out to customers and notify them when a new bill is due. So to kind of bring him into the store or bring him into the app, but just generally show that awareness of managing their health. But I think beyond that, it's looking at different partnerships.
So sorry, listen, and just as a bolt-on. So say for example, I'm a money transfer operator, and at the moment I'm offering my guys, they can log onto my app and they can make cash collections, and they can also make bank transfers. Could I come to say Paykey and say make an agreement with Paykey, bolt onto your system, then start offering bill payments to my clients to try to retain them a bit more, and try to offer them other services, not just the bill, not just the cash pickup, not just the bank transfer, not just the, as you just mentioned, the mobile top-up. It's getting quite, I mean, sub-Saharan Africa is huge, the mobile money and mobile top-up. Is that something they can do to add another service?
Yeah, and very simple to add bill payment to 30 markets. It's once you're connected to us, it's what we do is we kind of standardize the market from a perspective. It's almost like Visa. We make a bill payment in Mexico seem the same as a bill payment in Nigeria, as a bill payment in India. We standardize the entire experience. It's the same, and we add mobile top-up, we add gift cards. So kind of a one solution platform that makes it really easy, as well as those capabilities to be able to kind of actively reach out to the customer and really, what we call manage their financial health, help that you're kind of looking out for them. That payment, that electricity payment you made to the company in Mexico, CFE Electricity, next one is now due for this amount. Come onto the store or log on to the app and pay, or cross-sell them when they walk into the store. You have that information. So, by the way, that bill you paid last month is now due. Do you want to also take advantage of it and for this amount and pay it? So I think that's the value that our platform kind of brings to the table there.
And absolutely, and it follows on to customer retention. How, again, other clients can retain more of their clients and stay on their app is by, again, partnering with people such as yourselves and being able to offer new products and other products to facilitate
engagement across.
Absolutely fantastic. Thanks so much. I'm going to here we go. I'm going to direct my next question to just check the time, make sure we're all good. Sorry about this, gentlemen. Do you have stuff on? Yeah, fantastic. So Walter, this is probably your favorite topic. We also know that banks de-risking is a major challenge for many businesses. I know you like talking about de-risking. What tech innovation exists to overcome these challenges?
Well, I mean, you can't overcome the challenge of having a physical connection to a bank. No tech can achieve that. I mean, Regulatory technology, however, can de-risk your relationship with the bank by staying ahead of the game, right? Because often banks, especially in this MTO, the money business, the moving of money business, they haven't really been supporting it. They are, for some reason, reluctant to fully adopt PSD2 or the initiatives behind PSD2 in terms of the sharing of information. And so, unfortunately, you can't avoid de-risking other than by duplicating or having a redundant bank. Yeah. So, for instance, managing your volumes, right, and also having banking relationships specific to the vertical markets you're going to operate to, because certain banks will have the systems in place to focus on a certain corridor, right? And whereas other general banks may not, right? And so that's the way you de-risk it. You can't use technology necessarily. Of course, with Remit One or any, like an ecosystem where you can have multiple banks plugging into it. And as an agent, you're able to then point and click to a bank depending on the type of, transaction, where it's going. And that's where I see the redundancy happening, but it's all about, and it's a funny thing because the challenge for banks are typically they're marry-bound by legacy systems, right? They've still got their old IBM apps that they developed in the 70s and 80s running some of their core business applications, right? And so for them to adopt newer technology, say specific to say fintechs like Onfido or whatever, is very difficult, because it doesn't fit into their workflow. And the example is if you get a business bank account with Santander and you want to go commercial, you literally get a different sort code and account number, right? It's crazy. You don't get that user experience in the fintech world. We know what we're doing. What the fintech world lacks is trust. And that's what the banks have, right? And this is something that I think requires more collaboration. And it's a challenge for both our market and our industry leaders to work with the regulators and with the governments to ensure bank support. And it's not going to come voluntarily. We have to do this through, the power of our network, the power of the fact that if without our network, a lot of people wouldn't be able to feed themselves. A lot of people wouldn't be able to call each other, wouldn't get a lot of the services that we take for granted. And that's a significant impact, socially significant impact, globally significant, far more so now in today's world. And that requires all of us here in this room or rooms, right, to work together in a collaborative fashion with the relevant stakeholders to ensure that we have more partnerships with the key banks, because we don't, frankly speaking. And, and until that happens, de-risking is going to be just a matter of doubling up or tripling up or spending a lot more effort in managing your relationships, yeah? But certainly being ahead of the game in terms of compliance and KYC gives you a big advantage, right? Doesn't mean you're guaranteed anything, but it gives you a bit of an advantage.
Absolutely. Yeah, absolutely. No, I totally agree with you. I'm going to sort of ask a question to Stone now, but just before I do, I'd like to remind the audience that please feel free, if you guys have any questions, you can leave it in the Q&A tab at the bottom. Drop us a question in there, and at the end of the session, we'll have some time to answer some of the audience questions. So Stone, moving on to you. So we've seen blockchain, we've seen instant payments, we've seen wallets, we've seen mobile money. In your opinion, it could be 5 years, it could be 10 years. What's the next big thing that we should expect, or what should we be looking out for? Or what do you think is going to be the new experience?
Yeah, I think I will allude again to what Nelson mentioned earlier. I think that what I see as the future of remittances, or really of finance, even if it's just diaspora or expatriates finance. What I see is some kind of hub, some kind of central place where somebody can get all their financial service needs, especially if they have a need to do things back home. So if you're thinking about, pay, if I sit in Paris and I have to pay my grandma's electricity bill in Uganda, the same platform that I use should be the same platform where I have a virtual card that I use to pay my Amazon or my Netflix bill. Is what we're seeing is that amalgamation of different financial services. I think that's really going to be the future. So it's no longer just about remittances. I think somebody else mentioned again, where people are using remittances now pretty much as a loss leader. The way we think about it in my company is that we should be able to have multiple touch points. So not the traditional way of doing things, which is, you have this guy who lives in London and he sends money back home to Lagos once or twice a month. So you make $4 or $5 or $6 from them every month because they've sent 200 or 400 pounds. The way we think about it now is that we should be able to bank that guy in the UK and offer him more than just remittances. So he can do his stock trading on the Eversend app. He can play with his crypto on the Eversend app. He can send money back home. But our focus really in the very beginning in every market that we go to is around remittances. So that's what we go with into every market. But we want to have 20, 15 touch points with the customer at the end of the day. And even if we are making 50 cents, then that customer becomes very valuable to us, and we become more valuable to them. So if we talk to Payki, for example, and we offer what they offer in our app, and then we talk to somebody else, and we offer what they offer in our app, what we have at the end of the day is that all-in-one borderless app that we're talking about. That's the future that we see. In the back, really supported by these new technologies that we are speaking about around RegTech, around blockchain and cryptocurrency, to make things a lot easier for people. You should be able to do something that you do back home as if you are back home.
Absolutely, absolutely, and I totally agree. Totally agree with you. I'm actually going to go back to Nelson on this one, I think. And okay, fantastic. So, Nelson, do you think the current regulatory frameworks welcome or stifle new technological innovations in the industry?
Yeah, and I'll speak more to kind of the value-added services that we play in. Part of the issues, I think the regulators have bigger fish to fry, that they don't kind of set clear rules of the game. And so it just makes it a bit challenging for us, depending on where the client is located and kind of getting them set up and operating. Again, as I mentioned before, bill payment is a pretty small ticket item. I think most regulators, similar to customers where there's no awareness, regulators just haven't thought about it, particularly if bill payment isn't a regulated activity in their market. So so it becomes hard because you can't get clear, for a lot of the value-added services, you just can't get clear answers, because that's just not where the mind share is at the moment from the regulatory perspective. But so it just makes things a little bit slower to well, not slower, because actually in some ways you can start moving ahead pretty quickly, but you're always kind of cautious because you don't know when the regulator is going to turn around and say, okay, now I want to look at this. Let's have a discussion. But it could be advantageous, similar to and based on many years ago, right? They had a first mover advantage before they came before the regulation, and then you saw the tremendous results that happened. So it's really hard to say. I mean, when you want to be, you want to make sure you're crossing your T's and dotting your I's. It's kind of hard when the regulators themselves, it's not their primary focus. And so you're sitting there waiting, okay, when are they going to knock on my door? So it's, but I guess that allows room for playing around and testing things and seeing what works. And always working with consultants who are very good in the remittance space to make sure that you understand the kind of the stadium that you're playing in.
Absolutely, absolutely. Walter, do you feel that's a same similar case with the cryptocurrency? I mean, is there much regulation on the crypto at the moment?
Well,
Is regulation stifling or helping?
Well, it depends on where you are. It's confusion. There's no consistency. You've seen the recent events in China, and obviously the impact that has had on the price of crypto. I think the biggest impact that crypto is going to face depends on how we sort of respond here, is central bank digital currencies, right? Because that's, in a way, from a user experience point of view, if it comes from the banking system, they're going to have to adopt some of the things that people who are traditionally in that crypto space have to do, right? In terms of how they store it, how they spend it, etc., right? And so I think that's the biggest impact. It's going to be a positive impact because, in a way, it legitimizes the use of digital currencies, whether it's a central bank issued one or an ecosystem one or something like, Bitcoin. Yeah. And regulatory tech are surrounding digital distributed ledger technologies, right? That's because you're doing central bank digital currency, which is based on the same thing. It's DLT, right? Right. So in a way, they have to have that framework to support it, and that helps us as well. So I see those things. And then, of course, the last final bit is open banking. It's there, but it's going to be, I think, the wide adoption of it, is going to happen. Everyone signed up to it. It's just a matter of time before that happens. And I think the advent of digital currencies will push open banking. They work hand in hand, if you like, right? So that sort of rounds my contribution. I think those are the three main areas: RegTech, CBDC, and open banking.
Fantastic, and thank you for that input. I'm going to sort of circle back around to Stone and ask him the same question about customer loyalty. So again, Nelson, Stone, you in the remittance space are not thinking about the bill payments, but more in remittance, and not just the types of services you can offer your clients, but how else do you ensure customer loyalty with new technology? Are there things like scanning barcodes and providing things like referral codes and things like that? But in the technological ways, is there anything else that you may be doing for your clients that could retain them? That's Stone.
Yeah, so we're doing things internally around retention. So there's really a lot of stuff that you have to think about. One of the things, again, goes back to like bill payments or things that people need every day. So to keep people coming back, you kind of give them the ability to quickly buy, let's say, phone credit or some of the things that they use on a daily basis. So we are looking at that bundling of different financial services being a very, very nice retention tool. And one quick one is we have a measure of what we call the care factor, and this is kind of a measurement of the virality of our app through people inviting other people. So people telling about the Eversend, telling their friends about Eversend. And what you see is we kind of target to make sure that it's always above 1%. Above care factor of 1. And what that really means is that every user that we have is going to get to give us a new user. So by talking about Eversend, we've done a referral rewards program that kind of rewards both sides of of the equation. So the inviter and the invitee both get a small amount of money when the invited person actually becomes a paying customer, not before. This can be abused a lot, especially on the African continent. So we are very careful. But those are some of the things we're doing, like doing it through products, doing it through referral rewards. And then very lastly, something that's not traditionally done, but we see how is probably the most efficient, or the second most efficient thing, is giveaways. So just giving people cash instead of giving it to Facebook or Google or any of these guys. What we do is we will run something, let's say on Twitter, and say, if you tweet about this and you send us your Eversend tag, which is like a unique identifier for an Eversend customer, we'll send you $2. And what that does is that it creates a lot of network effects, because everybody is, typing this out and telling their friends about Eversend, and the next person sees it and does the same thing. So the network becomes quite huge. We've found that to be very, very, very efficient. I like it to just give your money to your customers, your marketing budget.
Yeah, again, that's quite an innovative and clever way, and again, of using new technology, again, hand in hand with that to again get that retention. It's very cool approach. I haven't sort of heard of anyone doing exactly that, but yeah, very, very good stuff. I was going to go to our Q&A. We've only got one question really. Can the aggregator, say in Nigeria, partner with Remit1 to bring more remittances using untapped networks for more than thousands outlets, even through Remittance1 is present? Even through Remit1 is present. Even though Remit1 is present. Okay, so how Remit1 sit, just sort of give you guys an idea. Remit1 is, again, we're a software provider, so we have clients dotted sort of internationally. We either help them with their license or they're already licensed. They can be banks or MPOs. We help them with their front ends, their back ends, and again, we then do have connections to partners like again Eversend, like PayKey, like UBA, like Flutterwave, like EchoBank, and some of the others out there. So that's how we work. We help build that ecosystem and bring people together. And we have been serving sort of the likes of Eversend for the last sort of a few years. So we don't really have any. Oh, here we go.
Let me.
Yeah, please go ahead.
I was gonna say, let me jump in there a little bit. And yeah, I think what Baba was trying to ask was, even though Remit1 is not present in Nigeria. And I just wanted to mention that, so we have a B2B product that the difference between working in Africa and maybe working in Europe is that in Africa, we don't have a lot of infrastructure. So we've been forced to develop a lot of financial infrastructure ourselves while trying to build this Eversend product. And what that has meant at the end of the day is that we have a lot of customers actually using our B2C app as a B2B product. And that has made us run towards developing a B2B product. Our infrastructure that we've built for collections and payouts is already integrated in Remit1, I think for payouts especially, because we use it from Remit1. So I just wanted to say that if anybody is interested, just reach out to us. You can connect PaySupport, and PaySupport makes payouts to through PaySupport, which is our product. You can make payouts to Uganda, Kenya, Rwanda, Nigeria, Ghana, and with just your presence, your current Remit1 integration is enough for that. So pretty much the question Baba was asking, yes, this is possible. And I don't think you need to do anything. Maybe Osama can give details, but you don't need to do anything new. We are already integrated. They just switch you on as long as you're a Remit1 customer, and then you can play in those markets.
Exactly. Thank you so much for that for that input, Tone. That is pretty much it. I think I got one from Bipin here, but that's mainly in the Nepal area. If you want to operate in Nepal, is it in a country like Nepal, where BFIs are mostly focused on traditional loan deposits, how can a fintech company help such BFIs in issuing and acquiring business. So it's Bipin, just to let you know, Nepal is a receiving country when we talk in terms of remittances. A lot of diaspora is in Europe, especially UK. We have a couple of clients in the US. There's a big one called Prabhu Group. I believe they do a lot of payments to Nepal. So Nepal is a receiving country. If you wanted to set up a remittance company, or depending on which side of the payments you want to control, if you want to control the sending side, you would have to go set up in a sending country in the West, like the US, UK, get a license, a bank account. You'll have your clients there, Nepalese clients wanting to send money back home to their friends and family, relatives in Nepal. You can then either work with a partner who's already licensed there, or you can control both ends of the market, where you yourself will also get licensed in Nepal, get a bank account, and then control both sides of that particular corridor. Remit One, we could help with the sender side. So whether that be UK or Europe, getting a license and getting established over here. In terms of Nepal, unfortunately, we don't have any specialists over there. Not just the licensing side of the UK, but also the technology to get you set up in the UK and then connect to the banks in Nepal to be able to pay out there as well. So hopefully that's, can you help with safeguarding bank account? Yes, we can help with safeguarding bank accounts. Again, only in UK, in Europe, UK based strictly at the moment, not even Europe. Licensing in Europe, safeguarding bank accounts, UK only at the moment. De-risking is super hard. I think probably I think Nelson can attest to this as well. US is even trickier. I mean, some of them asking for sort of $1 million deposits for holding money transfer operating accounts. It's because of de-risking again. It is super hard. The accounts that you are going to get, they're probably not going to be cash collection accounts. They're more than, they are out there. They are out there. We can help them, but they're more than likely going to be digital payments only. So you can receive via debit or credit card or via wire transfer. Cash collection, again, big no-no. Very because de-risking is near enough impossible to get. It's not going to be your high street banks. It's going to be probably one of the challenging ones out there as well that you're going to have success with, and again that we can assist with as well. I think we're getting questions through on this one as well. Yeah. Guide us to avoid frauds and payment security in Africa. Can you guide us to avoid fraud and payment security in Africa? I think that's a stone question, I believe. Or do they mean in general guide you? Can you guide us to avoid fraud? Do you mean you're looking for an AML officer? That question's kind of vague. Do you mean you want a quick question or guide you, as in guide the business in total? Guide us to avoid. Not sure about Abdul Qadir. What message from him? It's kind of vague, that question. So if I was to say to Stone, just generally, what are the things you would look out for? Again, to avoid or to minimize your risk of fraud and security. Stone, you still with us now?
Yeah, I am. Yes. So it's really mostly around the most fraud that we see is really around cards. So if you're not using cards, you're kind of much safer. But now we've seen all kinds of frauds. Let me just tell you one super interesting one, even before I tell you what we do to solve it. We saw recently guys who created a website that looks like a McDonald's website. They run Facebook ads and they send customers to these websites in the Middle East. And customers then try to buy something, but really what they're doing is fishing for information. So they get the card details and they try to use them within the Eversend platform to add money to Eversend. And what we saw was that even we take cards only if they are 3DS secure. So even with 3DS security, what they do is they also get the 3DS code and then they use it as the customer is transacting on the other side. They use it this side. So the customer is expecting somebody to take off, let's say $10 worth of their money, and there's a 2,000 transaction happening in the back end. This was like mind-boggling. You get chargebacks, and it's really tricky because the customer actually authorized the payment, but they thought they were buying pizza, and the card is being used at a remittance app in Africa. So it's really a mess. And really what we've done internally is we build every single day with all kinds of fraud that we've seen for the last 8 years that we've been in the game. And you're constantly plugging holes of how did this happen? How do we make sure it doesn't happen again? So in that case, what we did was that even if your card is 3D secure and you've actually done you've done the two-factor authentication, what we do is if you're registered, let's say in Kenya, and you're trying to use a card that is from the US or from the UK or France or Qatar, what we do is that we might collect that money, but we don't immediately give value. So within our platform, we've put some kind of buffer where we, again, using what we were talking about, using new methods. We have APIs that we can call to say that Osama is in the UK and he's using this card, but where is this card issued? So when we know that the card is actually issued in South Africa, then we don't really give you value immediately until then we have a conversation and we can chat and make sure that the card actually belongs to you. So you see, up to a level where 3DS secure is not enough to avoid card fraud, but we see all kinds of things on a day-to-day basis. But you kind of have to be in the game and looking at what's happening and solving problems every single day with technology, with a team of compliance and fraud people and developers willing to build these things to help your customers out.
Excellent, fantastic. And Nelson, I want to sort of ask a similar, following on from what Stone just said, similar to yourself, because I know, again, the states is quite different. Each state will have its own rule and regulation. Let's just say I want to pay a bill payment, but I've used somebody else's card or trying to do something fraudulent. How do you guys tackle that?
Yeah, on our platform, we're actually payment agnostic, right? So we're B2B, and the client that's responsible for the collection of the payment is the licensed entity, the MSB in that state, and they're the ones that define what the payment method is acceptable for paying the bill. If it's a walk-in retail, they may accept definitely cash, may accept debit, they may accept credit card, but again, that's up to them. It doesn't really impact us. We don't really see it. You're on mute.
Sorry about that. So you sit just behind that, right? So the MSBs, again, they will collect that either by a debit, credit, cash card, and again, you'll sit in between where you're B2B processing those payments and then paying them over to the bill company. Fantastic.
Correct.
Thanks so much for that. Guys, I think I've got one more question. Oh, for Eversend, literacy is still a huge problem in Africa and is slowing the adoption of digital money in many countries. Additionally, there are lots of frauds with mobile money. How's your company working on this?
Yeah, I will, but I think that there's two things maybe. One is there's issues around personal finance literacy. So how do you, build your wealth? How do you protect your wealth? How do you deal with financial services? That's an ongoing thing. One of the programs that we're doing probably to launch in the last quarter of this year is to do a series of educational content that we deliver straight to our customers in app, SMS, and also on blog posts and opinion pieces all over the places where we operate. So that's really on the literacy part, especially since we are going now into securities and stock trading and stuff like that. We really need to help people to understand how to build and manage and protect their wealth. But I think the adoption of digital money is probably fastest in Africa. So in that case, I don't think it's slowing down in any way. If you look at something very many people don't understand is that there was 22 billion US dollars being sent into Nigeria about maybe 2019, 2018, and that money kind of just disappeared. And what really happened was people just shifted to using cryptocurrencies and Bitcoin. And the kind of adoption of new technology or digital money in Africa is kind of mind-boggling, especially for these cross-border payments and stuff like that, but not necessarily for everyday payments at the shop. So we haven't reached that stage. Yeah, you said there's a lot of fraud with mobile money. How are we working to avoid this? It's really the same stuff that I was talking about, building things that you see new fraud every day. So you build things to kind of protect you against this. I can't be very specific, but one of the things is that once you start a payments company, you have to make sure that your regulatory compliance is top, your KYC, your due diligence. You have to know the customer regardless. You can start out and say, let me do these things manually, but if you don't use technology to face match, to do alteration detection on IDs, to check databases for IDs and things like that, you really can't manage. And those are some of the challenges we have, especially in Africa, where ID systems are not fully developed. But you have to keep doing everything you can. Mostly, a lot of KYC and proper due diligence actually takes away maybe 95% of the fraud.
Yeah, and I mean, just to add to that, people are people, right? It's nature. They'll always try to find a new way to get around things, and we just have to be diligent and find new ways to stop them in doing that. And it's just an ongoing thing as well, an ongoing process. It's just the nature. It's the nature of the business that we're in, I think. But yeah. Next one's to Walter.
One of the.
Sorry, go ahead, please.
I was gonna say one of the cool things we have with Remit One is ongoing AML diligence, ongoing AML checks. So we check you when you sign up, but then we also check you every time you send a transaction. And this is actually in the Remit One software, that for every transaction you're checking velocity checks. So how much money is somebody sending in a day, in a month, in a week? Do you have limits around that to avoid money laundering? We also have checks for sanction lists and politically exposed persons. And this is also happening per transaction. Every single transaction, we're checking the sender and the recipient. So there's a lot of work that is happening in the background, and that really helps out.
Yeah, absolutely. I mean, the main reason for that, obviously, is, guys, I might be okay today. I might not be on any watch list, but do something untoward tomorrow and end up on one of those watch lists. And if you're not checking every single transaction, you will not pick up on that. And again, you're putting yourselves at risk. You're putting your company at risk. And again, could be huge fines involved. And some of the time we can be talking actual jail time. So this is very, very serious stuff.
As serious as it is, I had a meeting with a vendor out of the UK just recently, an well-established frontline IDV vendor, right? And we talked about the cost base, £1 per lookup, right? Yep, effectively for IDV. Now, in the market where you're sending, the sort of £200-300 or below, that's a massive impact on the margin. And I think, as much as you think fintechs can reduce that, and I think that needs to be looked at, I think in a way, because it's a blockage for more.
So it's a bit of a weird one, that one, to be quite honest with you, because the UK law at the moment says that you can actually send up to £500 without providing much information at all.
Yeah.
You don't have to provide your ID. You can just provide your first name and your last name and your date of birth, and that's fine. You're over 18, you can send that much. It's only once you want to send a bit more that you do have to start collecting that data. But the problem is, people and companies, it's demanded from them that they do these checks anyway by the banks, even though the regulator might not want it. Their service provider, again, as you mentioned earlier, you do need these banks in place to receive your money in. They expect you to be doing these checks at the very least, and again, it's to safeguard themselves. So it ends up that a lot of companies do the checks even on the smaller payments, and as you just rightly mentioned, it does have they're a £1 a check, and it does have a knock-on effect on that £200-300 payment that they're doing. So it's a little bit of a tricky one. It's not necessary, but it is necessary, if that makes sense.
I always think you got to wake up in the morning, right? And the big risks are banking, as you know. One of the biggest single critical things that can go wrong in a money services business is losing their banking. It is fatal in some instances, right? And the thought of waking up each day not knowing that that's going to happen, or you may not have the systems in place, that is what's critical. And I think no matter what, unfortunately, I think we should all work together in terms of how we can reduce the price down, because it's a sort of a negative feedback. If you think about it, the lower it is, the more easy it's going to be used, the more widely adopted, even for sub 500s, right? Because often that's how it starts on the sub 500s. They stay at that level, and you know how it grows from there, right? This is not.
Look, I mean, the first time you send some money with someone to get comfortable, then you're not going to send your whole lot, are you? You're gonna do a tester. You're gonna send a 100 quid and see how it goes, right?
Yeah.
So you're absolutely right. And then we get into that whole cycle of how much does it cost them for them to onboard them to make that £100 payment. It is difficult, yeah.
And also, too, to be honest with you, if you want to deal in those markets where the end customer isn't prepared to give or go through the process, because onboarding now for an app is pretty slick, man. You can get it done in a couple of minutes, right? And I've seen some really good ones. I've seen some awful ones, right? But you can get it done. And of course, with a proper system, the level of ID to open up and operate a facility would depend on how we use the facility at the start and looking forward. So where you might accept just a photo ID, to get going. But if you're starting to do transactions above a certain value or with a certain frequency or to certain destinations, or using the source as going from cash to card or multiple different cards, right? Then, obviously the system has to go, right, pause, we want more information, right? And without disrupting the customer's experience, right? And I think that's really up to the MTO to decide what marketplace, because for me, unfortunately, as much as I've grown up in a world where I didn't need to have an ID card going anywhere and doing anything, right? You could walk into any branch, all you needed was a passbook, right? And take money out. Like, you didn't even need a ID to go with the passbook. Your passbook was your ID, right? So I think that's really what we all have to think about, is how we can get to a point where it becomes a natural part of how we do business, and that will weed it out. It'll make it harder. It'll never eradicate it. And really, it's a constant cat and mouse game, and we're in some instances, we're the cat, or we're the mouse, and the banks are the cat, right? And then you got do you know what I mean? So yeah. It's a Tom and Jerry cartoon.
Yeah, it's crazy. It does get crazy. Guys, we're actually coming to the end of our session. I'd like to thank everyone so much. Nelson Isri, thank you so much for attending. It's always a pleasure to have you. Walter Cruz, again, thank you so much as well for attending. It's always a pleasure to have you input and have you attend with us. Stone, it's a pleasure. Thank you for attending as well, and thank you for your time today. It's always interesting to hear what you have to say and new things that you guys are doing in the space and in the industry. So we hope you found the session useful. Our next panel will start tomorrow at 8:30 a.m. to 10 a.m. BST, that's GMT +1, and it's going to be Remittance to Pakistan, Financial Inclusion and Growth of Digital Economy. After that, at 10 a.m. to 11:15 a.m. again, BST, GMT +1, we will also be discussing perspective on digital ID. what the future may look like, eKYC and AML. Make sure you don't miss it. If you want to review what has been discussed today, we'll be providing a written summary and a video upload of all today's session at www.remit1.com and our next Remit One newsletter. So keep an eye out for that. Lastly, thanks again, everyone, for joining today, and special thanks to our panelists. If any attendees want any more information about Remit One and our service, or any of our panelists as well, and any of their services as well, please do get in touch, and then we'll sort of pass you guys on and connect you guys together and move from there. So no, thank you very much, everyone. It's been an absolute pleasure, and hope to catch up with you on the next session.